Hey everybody, it's Eric. Welcome back to the channel. In this video, we're going to walk through a newly released SPX 0DTE strategy that I personally just started trading. I wanted to go through the numbers with you, and then we'll go through the setup. And let's start with just the back test and what we're basing these trades off of. This back test goes back. We're almost 3 years. We're doing this in September of 2025, but we started the back test in 2023. We've gotten 124 trades over the last couple years. We are running almost 72% win rate. But the more important number that I like to focus on when I'm looking at statistics and things for these trades is I like to look at the average winner and loser and make sure that's something that I can live with, because we know if it gets too skewed, meaning your winners are too small compared to your losers, it's really hard to stick into that trade when you have a couple losers in a row. So this one relatively maintains my 3-2 risk reward, which I'm typically risking about 300 to make about 200. And the expectancy of the trade here is $61. So for every one contract or one spread traded, you're looking to make $61. You're basically risking 300. So it's about a 20% return on risk for any particular trade over the last 2.5 years. Again, this is running a 72% win rate. And I just put this in a $100,000 portfolio, and we're merely risking 2% per trade. What does that mean? So you're only going to risk, in this case, 2% of 100,000 would be $2,000 per trade. Now, obviously, you can scale this up. You can scale this down. You can risk more. You can risk less. You can only trade one contract. But I wanted to put a little context about, if you did trade it with an allocation, what that would look like. And that's what these numbers here are. This is still the number for trading one spread at a time, but from a portfolio kind of standpoint, this is bringing in about 19% per year over the last few years. It's made about $60,000 in that $100,000 account. And this is just trading this one 0-day strategy. It typically triggers, you get 2 or 3 setups per week. And that's kind of the average sort of trade frequency. So let's walk through the actual setup to see if this is something you are willing to follow. First of all, this trade is going to be posted on the Alpha Crunching Trade Ideas tab every week. This is where we get a laundry list of back-tested strategies. We're going to look at the ASD strategy, which is this one, and we'll talk about what the ASD is in a minute. This week, for example, I'm doing this video in mid-September. This week, we had 2 ASD setups for Tuesday and Thursday. So like I said, there's typically 2 or 3 setups per week. And the ASD is basically a strength indicator. Now, in order for the ASD 0DTE strategy to show up on the Trade Ideas tab, it has to meet the ASD criteria. So what is the ASD? ASD is short for average strength deviation. And what that stands for, or what that means, is when we go to the daily forecast here, and I think one of the setups was on Tuesday. So the forecast itself is giving you sort of an average movement of intraday seasonality for this particular day. In this case, it was Tuesday, September 16th. And the ASD is a metric below that is telling you, well, is this stronger or weaker than last week? So we're looking for days with a stronger upward momentum or something that is outperforming the average of the previous 3 weeks. So that's the short of the metric. So I tried to boil this down to very simple. Is it green or is it red? For this week on Tuesday, it was green. Therefore, this trade is going to show up on Tuesday for the ASD strategy. If we go back, if we take a look at Thursday, for example, the forecast is relatively bullish itself, but also the ASD is actually positive. So Thursday is going to show up. Comparatively, if let's say we look at Wednesday, for example, Wednesday is just kind of choppy with a little bit of a bearish bias here. And the ASD is actually negative. So this Wednesday was not a day that we want to trade a 0-day put credit spread in this way. It doesn't mean you can't trade it your own way, but we're trying to boil this down to, mathematically, is this something that I can, go off of instead of watching the chart all day? So this week, like I said, there were 2 setups for Tuesday and Thursday. If you click on the trade idea itself, it's going to go through some of the technical analysis we look at prior. We want to make sure it's above the 2-day moving average and the 1-minute chart is in a bullish condition. I'm going to put an article. You can check this out for free over on the blog and you can walk through the back test and the exact setup, and it sort of explains everything in case it didn't come through in this video. So check out the article if you want more details about the strategy, and I'll see you in the next video.